All right, welcome everyone. So today we're doing an encore presentation of Mastering Market Pivots. A little bit of housekeeping stuff here to begin with. Of course, trading, there's always a risk involved. Standard disclaimer here, you guys. And also all of the charts that we're using today are from TradeStation. A little bit about me. I know a number of you are not very familiar with me. I've been trading for about 20 years. I started in the late 1990s and began developing my trading methodology. And over the years, I've done a lot of market education. I ran a trading room for well over a dozen years full time, ran it past that as a part time. I got into the educational side of trading because when I first started, basically it was what you would call a blog back in the day. Started a website called swingtrader.net. I was doing swing trading, of course, at the time. And one of the major educational sites of the day invited me to do a newsletter for them because a lot of their members were coming to my website and were interested in what I had to say. So basically all it was I was just, showing what I was looking at, why I was looking at it, and that sort of thing. And it kind of just grew from there. They invited me into their chat room, eventually gave me their own chat room, and I always kept as an independent trader. So from there, just kind of went off on my own. And I've been doing education along with trading ever since. I've written for most of the major financial magazines, Your Trading Edge, Stocks and Commodities, SFO, Modern Trader, all of those. I'm an expert at TheStreet.com's Real Money Pro, done off the charts with Kramer. I taught technical analysis for the CME Group, ICE, ISE, all those major exchanges. Featured presenter at the Money Show since around 2001. I've written 3 trading books, including Simple Steps to Trading Discipline, co-authored 3 others, but over the last couple of years, I stepped back from doing a lot of the educational side of things. I had a son and started focusing primarily upon a small group and private mentoring when he was born. And since then, he's now started school, so I'm back to doing more of that education in addition to managed accounts and, of course, my own account. The topic today is looking at market exhaustion and market pivots. So what we're going to discuss today is how to identify turning points in the market. If you're a trend trader, obviously you need to know this for 2 reasons. First of all, you need to know if you're in a position, if the market is starting to shift and exhaustion is beginning to play a role. So you're going to have to see, position management, where do I need to take my gains? Are things turning around? Do I need to tighten up and get a little bit more aggressive? And then, of course, there's also the opposite, where you might be looking for pivot points to take additional trades, looking for market reversals or corrections in the market. So the strategy that I'm going to talk about today is my favorite momentum reversal strategy. And this is the one that I use for trading a lot of those market pivots because of the high probability that it has. I'm going to show you ways that you can use this specific strategy for returns where in the majority of the trades, I'm going to be looking for 80% odds of getting 2 to 1 on the trade. But there's over a 90% odd of hitting a first initial target level, which will make more sense when I get into actually showing you the template for the strategy. Of course, absolutely trend exhaustion is predictable. When we look at what I posted out there on social media over the summer, for example, I named 3 major market pivots that were taking place in the market. And a lot of those pivots had to do with the strategy that I'm going to talk about today. There are 2 ways that trends can correct. They can correct through time and they can correct through price. So when we look at corrections through time, whoops, my chart kind of flipped over there. When we look at corrections through time, we're looking more at something that could be a trading range, sideways momentum. It could just be a slowdown in the uptrend. That could be a change where we're just seeing a correction through time as well. Now, through price, we have a little bit of a different type of correction. Through price, we actually have these pullbacks taking place. And that's where you'll see like major market reversals, market corrections. A lot of times you're going to have, of course, a bit of both. And momentum usually determines the dominant route of how that correction unfolds. So for example, if you have momentum shifting in an uptrend, you're more likely to see that when a correction occurs, you're going to get a stronger price correction. So the strategy that we look at today plays into both of these. And it is called the momentum reversal. So what we look at initially is going to be a correction through time, such as a shift in the momentum here. Let me grab my pen. Where we're seeing a slowdown in a trend. Usually it's going to continue to make some higher highs, but what I want to see are very slightly higher highs, basically creating traps, bull traps, people that are buying above previous highs or getting flushed out on their shorts above those previous highs. The next thing that happens with this strategy is that the correction will ramp up through price after a third high. So the momentum reversal has an initial high, a secondary high, and then a third high, and then has a pullback through price. This is what we saw on those market reversals that took place over the summer. So for those of you that do follow me in social media and follow me, in my Friday trading group, what you'll see is that I only called 3 market highs throughout the entire summer, and they were the exact market highs. So when I say that market trend exhaustion is predictable, I absolutely mean that it is predictable. So the strategies that we're focusing upon today are based upon periods where the market shows a slowdown at these highs after a strong initial impulse move, and then offers up those corrective moves that are stronger through price. So for example, back in April heading into May, that was the first one that took place. We had a strong push to an initial high, and then the momentum shifted, meaning even though we continued to see higher highs, the pace of that buying slowed. So we had these slightly higher highs take place, which led to a pullback following the third high, which you can see here. Now again, as summer continued to unfold, we continue to see these strategies. So for example, the end of the summer one, we had momentum begin to shift once again, following a strong impulse move on the upside here, 3 highs, and then the beginning of the pullback. This continued a little bit later on into August. We saw a secondary wave of selling. Overall, though, the same pattern is at play in each of these 2 strategies, and even to a degree during the midsummer one as well. However, we're going to look today at what is happening in the market now and how this has played out over the years. So this is a strategy that I've taught for quite a long time. And whenever I get into looking at different strategies in the market, I want to show you guys that it really is timeless. So we're going to start out by looking at some examples that took place years ago, as far back as 2013. And then I'm going to show you how the exact same thing is playing out right now, this very week in the market, so that you can understand that when I'm dealing with trend development and understanding price development in the market, I'm really looking at timeless strategies. These are things that no matter which market you trade, whether you guys are futures traders, options traders, forex, bonds, gold, silver, you name it, This strategy is going to work in every single one of those markets on every single time frame. So you might be a scalper, you might be a position trader. It doesn't matter. It's going to be every market, every time frame. So today's presentation actually includes examples from many, many different markets as well. So let's look at the strategy itself. This is the core template for the momentum reversal. Now, there's a lot of variations of how this core template plays out, but once you start to understand this core template itself, you're going to be able to see how it shifts and changes over time depending upon where the strategy is forming in a larger trend, what larger market activity is looking like. So take a chance here, take a moment, and go and do a screenshot of this. You know, take a picture with your camera, whatever you want to do. And take a snapshot of this. You can go ahead and print it out and keep it up, looking at it as, you know, your own market, whatever market you're focusing on unfolds. You can look for this strategy. So the core basics that we want to look for here. Think of it like a leg. You need to see an initial move higher. Usually that move is going to have a pause midway. It might be 1 to 3 bars, and that pause is going to be that kneecap. This is important because it plays a role in looking at when we protect our gains on the position. So this kneecap is one of those key traits. Then we will see an initial high made and an initial low, where momentum comes off of that high at a pretty similar rate at which it goes into that high. I'm actually going to change over to a highlighter so you guys can see this a little bit better. So you'll see basically an inverted V formation. What we want to continue to see for the most ideal textbook momentum reversals are back and forth V pivots, where we have a V, an inverted V, and again, another move back to a third high. So this is shifting that overall momentum from the leg portion of the strategy. These highs should be pretty evenly spaced, meaning the difference between the pivot on 1 to pivot 2 is going to be approximately the same amount of time as between pivot 2 to pivot 3. The next thing we want to see is for this entire shift in momentum here to be a parallelogram, meaning you want pretty parallel trend channels at the top of the shift in momentum to the bottom of the shift in momentum. So that is going to be the core setup, the beginning of how this pattern will develop. When we look at target levels and entries and stops, the first entry level is going to be looking at this push to the third highs. You'll see a channel in here forming, and as that channel breaks, that triggers the reversal. So you can of course drop down to smaller time frames, like if this is taking place on a daily time frame, you can drop down to a 15-minute chart, look for a strategy that is forming and developing off of that third high on the 15-minute to get an even better entry. Your stop is going to be above that third high. So give it a little bit of wiggle room above that third high. Usually, I'm going to be looking for target level 1 on this strategy. So that is going to be when you draw a channel coming off of this first pivot high here. Where that channel breaks higher, that is target 1. Now, in even the more risky strategies, you're going to see target level 0 hit. Target level 0 is that pullback off of that second high. When that breaks higher, that channel break there, that's called target level 0. This target level will hit about 98% of the time. So even if you're looking at this as, you know, you're just starting to get to know the strategy, you want to kind of build your confidence in it, maybe you can take part of your position off at target level 0 and play out the rest of it. Usually you're going to be looking for a minimum of 1-to-1 return on your risk at that point, but there's going to be times that it could be as much as 4-to-1, just depending upon how wide this channel is going into that third high. If it's a wider channel, of course, it's going to limit what your return compared to your risk is. If the channel is narrower and you can drop down to a smaller time frame, then you can get even better return on your risk. Now, the same strategy can also form on the reverse side. So it can come off of lows as well. Basically, you just flip your template over. Let's go back to 2013 and show you a textbook trade back from then. We were looking at the dollar krone as a currency pair. And at that point, you can see here's the clear-cut leg formation with the kneecap. The shift in momentum has these really solid V and inverted V formations. Now, coming off of this third low here, here's that channel I was talking about. So as that channel breaks, that offers your initial entry trigger. In this case, we had a bit of a shift in momentum following that channel break. So there was an additional entry as this little pause here took place, shifting that momentum further. Now, a lot of traders will look for things like channel breaks as entry triggers. That would mean, for example, connecting this first high and the second high when the momentum is shifting and taking a channel break. Now, on the momentum reversal, this can be riskier if you already have a move up and a pause and a second move up into that resistance level, because that channel itself is resistance. So you can see a push sometimes slightly above that channel that might trap you if you're trying to take a pure channel break there. It also is resistance from this point here, your uptrend move off of that second low. And that is actually that target level 0 that can form. So this zone in here from this channel is that initial 0 target level. And that's that one that hits 98% of the time. So if you get in early enough coming off of that third low, you can get a pretty decent return on your risk. But if that has like a bigger tail here and the channel's wider, it might only be a 1-to-1 return on your risk, like you could see here. Another entry point, if you miss that initial reversal strategy, you can look for these pauses that will take place, and you can look for continuation plays, like a two-wave pullback back into the zone coming off of that third low. So that can give you an additional chance to take a position if you miss it, if you don't see the trade happen until after the fact. That is another way that you can get into the strategy, and you use those same target levels. So target level 0 is no longer a factor because it already hit that as it came into this correction. Target level 1 is this channel break here. And that's that one that's going to hit at least 80% of the time minimum. Target level 2 is your kneecap. And you can see that this is where momentum now starts to shift. It hits that kneecap level and it shifts momentum. It's able to make it into target level 3, which is this channel break in here. Oops, got a little bit crazy with that. But that becomes your third target. And of course, if this is coming off of a major downtrend, you can get a longer base here and continuations even further. So if this is happening intraday on like a 5-minute, 15-minute, 30-minute chart, that can trigger a trade on a larger daily time frame where you can get swing trading strategies, you can get those larger option trades playing out as well. You'll just have to hold through a little bit of a longer correction usually after it hits target level 3. So you can expect a base for it to play out a little bit further before it tries to continue. And we're going to look at it this week on Tesla, where we're seeing that same thing happen. Let's move forward and show you a couple more examples of this. So over the summer, I taught a class on identifying market exhaustion and trend exhaustion. It wasn't this particular strategy, but I ended the class with the question, okay, here's what we're seeing happening on the Kiwi. We were seeing a pullback into a support level, and we had these three pivots that had that were unfolding there. And with every class that I teach, I want you guys to understand that this is not something where we are dealing with hindsight. Hindsight is 50-50. You need to realize that these are things that are playing out live. And this is a screenshot that I took at that time to end that session, to end that class, where we were looking at types of reversals and types of trend exhaustion. And I left them with the question, okay, what's your prediction? Where's the Kiwi going to go at that point? Well, let's look now and see how that played out. So you can see it had those three key pivot levels off of those lows. They were evenly spaced, and coming off of that third low, the initial entry level would have been this channel break here. Now, of course, I didn't catch that channel break on that particular trade. Instead, we were looking at the bar here as the pullback, but it continued to offer continuation action, where there was an initial pull higher into what would be that target level 0 point, a pause, continuation move there. Trends often form in waves of 2 and 3, so usually you will look for a second move to hit resistance. That is that target level 1. And then it offered another pullback here, where we had another two-wave correction that offered another 2 waves of upside that allowed it to come into that kneecap level. Now, on the Kiwi, we didn't have the stronger reversal where it ended up pulling up into target level 3 because of where this took place on the larger time frame. On the larger time frame, this was coming off of a greater level of a greater level of resistance. So this was actually a pullback into support as opposed to being part of a larger downtrend. If it had been part of a larger downtrend, you'd be more likely to see the stronger reversal. So where a strategy takes place in the larger trend is going to impact what kind of follow-through it ends up having. In this example, it was able to do the 2 waves, both on the smaller time frame, here 2 wave into target level 1, which is going to hit about 80% of the time or more. And it was able to do another 2 waves into the kneecap. So we had that 2 and 2 play out on a couple of levels here. More recently, we've seen this strategy playing out on the dollar yen. But here's a variation of the strategy, because when we had the leg portion and then we had the foot portion, there's not much of a shift in momentum. That meant coming off of this third low, we have a bit of a riskier strategy. We also didn't have the V pivots. So when it formed these corrections coming off of that second low, it fell into more of a trading range with this 2-wave correction in here, leading to the continuation move to the lows at number 3. When this happens, obviously it still went and hit target level 0 there, which is fine if you're looking at like a short-term swing trade or you're looking at an intraday strategy. Great, you've got a couple of day move off of that third low. That's perfect. It's not going to get you as much though when you're looking for position trade, because this is now more likely to widen up at that point to allow for a greater shift in momentum to take place. And also, because this didn't have that V formation there, it makes it higher risk that it has a harder time hitting those target levels. It might still be able to go to like target level 1 if you have this V, but you still don't have a momentum shift here, but it's still going to be more difficult. So this shows you a place where you need to adjust what you're expecting on a position, gets into a little bit of the advanced action on the strategy, showing you how, this can play out in different variations. And this is what we ended up seeing develop coming off of that low. When we look at that strategy in itself, as it began to play out on the larger time frame, you can see that it did another momentum reversal. What's a little bit different here, another variation, is that when we look at the two highs that take place between the three lows, you can see that this formed a bit of a W formation. So instead of forming like an absolute pivot coming into that second low, we had two smaller lows take place. So in this variation, you can go and take those two lows here, draw a line right smack in the middle of them, and that becomes your de facto second low. So when traders ask me, this looks kind of like your momentum reversal, Toni, but I can't see that second low. It's not obvious to me. It's usually because of something like this, where the low is there in spirit. The idea, the concept behind it is still there, even if you don't have that absolute pivot. So think of how the spirit of this strategy can play out when things don't look quite exactly like the template that I gave you. Here is an example of what that can look like. And this can happen at the highs too. It can happen, between these two highs. It can happen between low 2 and 3, between low 1 and 2. Usually it takes place at this second low though. That's where you can see this variation play out. Now the strategy, of course, coming off of that third low to take the channel break. If you miss it, you can take continuation moves. In this case, there wasn't a lot of opportunity for continuations. It kind of kept going. It paused at target level, the initial target level, which happened to be here. 0 and 1 both hit at that same level. So it paused there, continued going into where the momentum had initially shifted for that less than ideal one. When it hit the kneecap levels, you can see momentum started to continue to shift. And right now it's coming into that larger target level, which would be traditionally target level 3 on the template. So it's shifting momentum again as we are coming into that level there. For those of you that trade the bonds, we had the same type of strategy again unfolding the bonds just recently. So we had the 3 highs, 1, 2, 3. Here's the leg up. Here's the kneecap. V's and inverted V's are playing out pretty well here. The trigger for this one was you could use the channel break on the daily time frame, of course. This kind of took place with some gaps in here. Or you can drop down to smaller time frames, like I said earlier, and you can look for strategies that are unfolding on those smaller time frames. In this case, you also had a gap that's coming off of a 2T, which is a type of double top where you have a slightly higher high, momentum is shifting into that higher high, and that creates that trap pattern. You would have had to have entered this with a gap strategy intraday though, because it took place with a breakdown coming out of that channel. We had a gap into the next day. Overall, everything here favored continued downside. It wasn't a larger downtrend on the monthly time frame. It was a head and shoulders pattern that is trying to form on that monthly time frame. So it created a level where we're still coming off of a pretty decent turnaround on the larger time frame with this head and shoulders pattern. Decent resistance, time development wise, the shoulder took about as long as the previous shoulder, which is perfect when you're looking for a reversal strategy that's going to be a continuation of a larger move. So we had that really nice setup. Target level 1, which is the major level that I'm looking for, again, is that break in that channel there. And that's actually continued to pull into that zone here at the end of this week. Of course, I grabbed these charts at the very beginning of the week when I first presented this class. So you can just see that it's really continued to play out here. When we look at this, you'll actually notice that coming off of that second high, we had that same strategy play out back then as well. In this case, it would have been a 2T, just like we saw happening here. Pulls up, shifts momentum at that high, and that offers the strategy coming off of the third highs. Took place on a larger time frame here on the daily charts at that second high as well, where it had the two waves up, the little kneecap, shift in momentum, pretty nice parallelogram forming here. And then it pulled stronger into an attempt at a third high, so we didn't have that V quite yet. So what it did was, just like we saw in the dollar yen, it went and formed two highs at this third high. So by going and transecting that right through the middle, you can see again that that difference is now about the same. So that same concept that I told you, that's a little bit of an advanced concept on this strategy, plays out here on the bonds as well. The trigger is, of course, that break in that channel to the third high. And in this case, when you have the two pivots with the 2T formation, you can use that channel break there as well. Again, you'd also have to have played it with a gap here if you were just focusing on trading the ETFs. Now, when I was in Chicago this week, I was trading from the CBOE and met up with Bob Lang at the CBOE on Monday and Tuesday, and they were looking at EXPE. They were trading options on EXPE. And what I noticed, of course, right away was that we had that same momentum reversal strategy unfolding on EXPE. So when they were looking at, target levels, what's going to be resistance levels on this EXPE, coming off of this, you'll notice that this momentum reversal here with the first low, the second low, and the third lows is not coming off of a larger downtrend. That means it has greater risk that it's not going to be a major reversal, and instead it could be part of a smaller reversal. We go down and look at the monthly time frame, you can see that there's still room that this can still pull into support and base out longer on that monthly time frame. So that meant that they needed to keep tighter target levels in mind when looking at how that can play out, because this was an initial pullback in a larger downtrend. So coming off of that, you can again expect that it might have a two-wave move on the upside, just like we saw in the previous example, where it can pull up two waves, but then it can struggle when it gets to that 80% mark, which is where that channel breaks from that first high where the momentum originally begins to shift. So when we were talking about this, here's where your entry and stop would be if you managed to catch it coming off of that initial low. They were looking at the continuation move here, where it has a little two-wave pullback, two-wave correction, just exactly like what we were seeing earlier. It then had an initial move up, which of course left room for a second move up, but you wouldn't look for anything past that at this point, because the overall momentum would now be shifting at that point, and because it was an initial pullback coming off of the high. That means that you've got to go for those closer target levels. So here we can see that second wave starting to play out there. And here's what it looks like here heading into Thursday's class. You can see it did another little two-wave move there right into that 150 zone. LVS is another one that they were looking at, and this one was interesting to me because it had the momentum reversal playing out on multiple time frames here. Can you spot them? There's actually 4 of them on this chart. So here's what they are, and they all hit at least target level 1, and most of these go for the kneecap as well. You'll notice that each of the corrections, again, is a two-wave correction. So here's the first one. It has stronger momentum on the correction. It hits the kneecap pretty easily. In fact, it even comes down close to where that target level 3 zone is. The second one is a little bit slower. It kind of shifts momentum here. It still has that two-wave pullback. The third one here, again, a two-wave pullback, a little two-wave correction, and then the second wave here. And again, that also pulls into the larger target levels as well. So you can see these are all hitting those targets that we talked about both on the template and past that level. Now, the fourth strategy is, of course, all three of those highs connected together. You have your first high, second high, and then the third high there. And coming off of that, again, we have the two-wave pullback. It brings it into the target level 0. In this case, it does a little bit of a two-wave bounce here, pulls back, creates this as a two-wave. So on the template, this is that continuation move that I showed you guys on the initial template. And I'll show you guys the template again here in a second as well. So this offered an additional strategy where if you miss some of these initial plays, you can trade the continuations on this really, really easily. You can do, if it pulls back up in here, you can trade that bounce back up as it comes back into this zone here, and that doesn't always necessarily retest that previous high. In fact, many times it won't at all. But if it does come back and retest that zone of the previous high, that is a really, really strong strategy at that point. That's like one of my second favorite entries on this, is if it does try to come all the way back up, especially if, you know, coming off of that third high, the momentum isn't quite as strong as I want to see. Because at that point, usually you're going to get a really, really strong move to the downside. In this case, it even took place overnight. We had a really strong drop overnight. Now, when I taught this class on Tuesday, another one that they were looking at was Tesla. And what you'll notice is that when I grabbed this shot on Tuesday morning, Tesla had a variation of this exact same strategy once again. Now, here is the leg for the strategy, and here is the kneecap. It had a little bit of a longer base here coming off of this head and shoulders. So we're not counting this as one wave down, two waves down, three waves down, because this pause for the kneecap is a lot shorter than this pause for the shoulder coming off of the head and shoulders. So that means we can treat this move here as the leg. So that's important when you're looking at target levels, because this is the kneecap. I can't quite draw straight here. And then this is where you would look at as the larger target zones. Now, this is a little bit of a sloppier version again of this momentum reversal. When we look at the larger range that's happening on the daily time frame, you'll notice it's about the halfway zone. There's really good support here, but it's still, you know, midway within a larger trading channel. So there's always the risk that after pulling down for the first time, it might later on try to continue to do a second wave down. So going into the trade, you really have to pay attention to where that trade is forming in a larger time frame. On LVS, they were trading at major highs. On TSLA, this is an uptrend, and again, you have that first pullback, just like on EXPE. So when you're looking at like the most guaranteed target levels, you're going to be looking at where that momentum is shifting as like the level that's going to hit like 80 to 90% of the time. But when you look at target levels that go past that, a lot of times it might have a harder time pushing past that kneecap if it manages to push past where that momentum shift first began. Now, as this unfolded during the day on Tuesday, it triggered pretty early in the morning. And as I said, I always drop down to smaller time frames to look for entry triggers. So here you can see this had a shift in momentum here early in the day. And here's the channel break one, so you can see, you know, in this case, it ended up continuing through the channel break, whereas in other times we've seen it pause there. And then it offered another continuation a little bit later on. Let's go look at this a little bit closer detail though. So this is where it really gets down to the nitty-gritty of where you can get the most out of these trades. So when you're looking at the pattern on the larger time frame, your stop is under that third low. If you're able to get it intraday though, with a two-wave pullback and a two-wave correction, that is going to give you a level where you can place your stop right at that point. So your entry trigger is that breakout. Your stop is here. And you got the potential for that larger momentum reversal to give you a much stronger continuation move. This offered another trade later in the day, towards the end of the day. Here's your two-wave correction here, and then the momentum shifts. So you can take it coming off of that momentum shift. That's usually where I will do it, especially since the time development was really similar to back here. Or if you can see it, shifting again to continue, you can, take that additional strategy there. What's important here is you'll notice that the volume is changing. So as these corrections take place here, volume is shifting where we have a drop in volume. That's showing you that there's no real interest in selling as this is pulling back, and it's going to support the continuation plays in the direction of that momentum trade on the larger time frame. So here's what ended up happening on TSLA. So we had that breakout, a little bit of a pause here, and you can see that it went and hit these target levels really easy. So here's where that momentum was beginning to shift on the larger time frame. You can see it over here on the daily, right here. There's that momentum shift zone. Whoops, I can draw a straight line there. So that's this purple line up here. And you'll notice that when you're looking at, what kind of rewards you had on your risk, even though this was a bit of a sloppier move into those three lows, it was still really good in terms of the return versus what you are risking on that. We have a move where even if you had the wider stop, you've got a 4-to-1 return on your risk. And if you had the narrower stop intraday, you could get 9-to-1 return on your risk before it hits these target levels up here. And on the larger time frame, there's always, of course, the potential that it can lead to a little bit further upside later on. But once it hits that momentum shift level where the foot begins to hit, you can usually expect that it's going to pause longer. So this is a three-wave move on the upside, three-wave trend exhaustion. So you need to expect a larger correction. And this actually did go even further here yesterday. So it did pull up a little bit more following my class. But ideally, if you're an intraday trader, that's where you have to expect that you're going to have to hold through a pullback. You're going to have to hold through a correction at that point. And that's where you need to look at those larger time frames and see if it's really worth it to go for those larger target levels. Now here is that template again for you guys. So if you missed the template earlier, here's your chance to grab it again. Let me clear it. There you go. So you can get a clear screenshot of it. And this brings us to a question that I asked them on Tuesday. What did you make out of the QQQ, out of the overall market that was happening as we headed into the last couple of weeks? We have the idea of the momentum reversal, but it's not quite. There were a lot of additional risks that were forming on this. So this is something I talked about a lot in my forward focus group over the last month or so, where we were dealing with resistance levels 1, 2, 3, but it wasn't quite the template exactly. You don't have the parallelogram. You don't have those exact V formations coming off of the highs, where it would have pulled it down into this level to open it up wider. That would have given it a better reversal. You can see that template over here. So even though this was still able to hit target level 0, which is great, again, if you're doing it as just like a swing trade and you're coming off of like a 60-minute time frame, it was almost a 2T. It's a double top in here. Didn't quite have the slightly higher high for a trap, but the idea was there. But it wasn't able to lead to any further strong reversal level yet, because even though the spirit of the pattern was there, it's a variation of the strategy. So once again, you have to understand that, as things shift, target levels that you're going to look for the best places for support and resistance are going to be different. And you have to be able to adjust for those as the trade unfolds. So where do you go from here? You know, do you want to know more about how to understand price development, you know, how to determine whether it's going to be something that you can get those larger target levels, you need to look for the smaller target levels? Do you want to learn more strategies like the one that I've shared today? If so, I've got a boot camp coming up that kicks off this next Wednesday. And for the next 6 weeks, we're going to be meeting every Wednesday morning at 10 o'clock for about an hour and a half plus Q&A. And every single week, I'm going to talk about one of the key building blocks that goes into understanding price development. So we're going to be looking at trends, for example, and understanding not only just the basics of trend development, but how variations of trends can form. Everybody can look at like a three-wave trend development and, you know, reference Elliott wave, but when it comes to actually seeing how they play out live, that's where people struggle, because a lot of times trends don't look like the textbook price. They don't look like what you're going to see in your books or online in courses. We've seen variations of the momentum reversal strategy throughout today's class, so you're going to see that every strategy in the market has variations, and every pattern is made up of building blocks. These are technical things that are taking place within any strategy you're trading, whether it's the momentum reversal or if you're trading somebody else's strategy where it might be based on something like RSI or anything like that, head and shoulders patterns, whatever. There's going to be building blocks that determine how that strategy plays out. So the boot camp focuses upon what those building blocks are. And each session builds upon the previous session, where we start to see how they come together and how they impact the trend development that follows. So usually when I'm working with traders, I will work with them to start with on beginning with like one or two strategies. What happens is that you will see how strategies unfold coming out of that initial strategy. So if you're using like the momentum reversal as your core strategy, for example, that can lead to additional strategies like continuation setups on the short side, or continuations on the long side. And these building blocks determine how that is going to play out. So not only are we going to look at 5 technical signals that will influence the market, but we're going to look at six building blocks. When I first taught market analysis and trend analysis and looking at pure price action, I had 5 building blocks that I focused up on. But over the last decade, I've added another one that deals with time development and understanding the role that how long a strategy takes to form over time also determines whether or not it's going to be successful, whether you are too early in a setup or if it's too late. Has the pattern formed for too long and it's no longer valid? That is a key that can be determined by time development. The class is live, so I kick off every class by initially looking at the focus lesson of the week, and then we move on to using live market action to build upon those focus lessons. Every session is recorded and kept in a member section. So if you miss any session, you can go back and review it at any time. In fact, even if you're there for the session, you should go back and review it. It's going to be one that is aimed at newbie traders through even traders that have been trading for years. So I have some of my students are already registered for the boot camp, and they've been trading with me for about 10 years. The thing is, you can always learn more. You know, if you think you know everything about the markets, you don't. I've been trading for 20 years. I still don't know probably half. I mean, come on, there's so much to learn about the markets. So if you follow me or you follow other traders as mentors, this boot camp is going to play into not only like the type of market analysis that I use, but it's also going to help you understand other strategies and other systems that you might be using as well. And it can help you develop your own systems. What is best for your own individual personality? Are you somebody that needs to trade like momentum reversals where you're just looking for target level 0, where you're going to have a chance of at least getting 1-to-1 like 80, 90, 95% of the time? Or are you wanting to look at, going even further than that? And this is a chance for you to learn where the differences take place within strategies. So yes, everything's recorded. If you cannot make it live, I want you to go back and review the sessions and send me questions in email. So when it comes to the Q&A section the next week, I will go over those that I get in email. So you will have your questions answered as well. Also, I'm always available via email for any additional questions that you might have to look at. And does anyone have any questions right now for the class or anything else? Are you a trend trader? Is the bootcamp valuable to you? Absolutely. So we're not just looking at counter trend trades, guys. We're looking at the entire market, how the market shifts from one trend to another, from one strategy to another. Whether you're looking at continuation patterns in the trend or reversal strategies like the one that I shared with you guys today, it's how every single one of these strategies in the market is built. So it looks at things like bull flags, bear flags. How do you determine whether a bull flag has developed long enough to give you a strong continuation move? Or is it something where it needs to go further? What happens within that bull flag itself to determine, is it going to be one that is more likely to create a trap where you get into it, you think it looks great, but it reverses and turns around on you? Also, how to manage the positions. Where would you get into the position? A lot of traders will be taught use channel breaks, things like that. I'm not a big fan of using channel breaks unless you're dropping down to a much smaller time frame, because by the time the larger channel breaks happen on a daily time frame, you're too late, guys. I mean, everybody else is already in the position. Your return compared to what you're risking is going to be a lot lower. Of course, if you don't see a strategy form until after the channel breaks, you're going to have to drop down to smaller time frames to look for continuation moves. So is a continuation move going to be valuable? That's what this bootcamp is going to teach you. So how long after the course is over will you be able to review it? Indefinitely. I don't put a time limit on most of my courses. So yeah, you can go back and review it a few months from now. In fact, I recommend doing so because you're going to be learning. Over time, as you take strategies and you begin to apply them to the market, you're going to go back and things are going to start to click that didn't click the first time you go through a course. So you're going to have to go back and review it. You don't have to be a member of my website to review it. You just have to be a member of the boot camp. That's it. So it is 6 weeks. We kick off next Wednesday at 10 a.m. I have a couple of slots still left in it. I do limit it because another thing I should point out is that it is interactive. So as you participate in the boot camp, I am asking you guys questions. So as this is particularly important when we come to the live market analysis, where we are using the live charting. You don't have to use the same charting that I have. I have TradeStation. You can use whatever platform you're using, but we will be looking at charts live and how the market unfolds live. So the concepts that I'm teaching you throughout the bootcamp are going to be ones that we will then be looking at live as the market is actually unfolding. When is the most important time to be able to understand it? And I'm going to be asking you guys, here's such and such. This is what's happening in the market right now. What do you think is going to happen next and why? Those of you that have been with me for a while, I will pick on you guys the most because I know that you better have some of those answers, and you can learn from each other throughout the course of this bootcamp as well. All right, guys, Thank you for joining me here today. I hope you learned a lot from today's session, and I hope a lot of you are going to join me next week as well. You know, I see a number of you in here that are already registered, and yeah, I can't wait, you guys. I love doing the live trading and live mentoring. I mean, I told you that's what I focused on over the last 6 years. So, you know, it's just probably the best way to learn. So go ahead, check out tonyhansen.com/bootcamp. Join me next week, and I will see you guys there.